Welcome to the Digital Growth Hack Club, where we help you elevate your business and your bottom line. Here is your host, Jenny Jones.
Hey, this is your host, Jenny Jones, here on the Digital Growth Hacks Club. Hey, listen, I have an opportunity to finally catch up with someone. They're busy. They're on different coasts. I'm on a different coast. We finally were able to kind of connect, but I want to bring on a guest by the name of Sean Tykr, and he is the founder of a tool called Tykr. And it's a little bit different tools than what I normally have on the show, but what I wanted to do was, me being a well-rounded show here, we talk about different things. We talk about solopreneurs, small businesses. We talk about entrepreneurs, different ways they can make their money go further and do different things. And I thought it would be a good opportunity to bring him on, and we can kind of share how these worlds are kind of merging. And I was going to say definitely due to COVID, but I think a lot of people have been forced into having to go into their own business. And I think now with the inflation being at its highest in the last 40 years, we need to make our money go a little bit further. And we need to get in these companies. Some of them still have record earnings, but we need to be in on that when they have the record earnings, especially the ones that pay dividends. So wanted to have Mr. Tykr on the show. I want to allow him to introduce himself in his own way, kind of give us a little spiel who he is and where he's from and what they're doing over there. Then we're going to get into some questions on how we as individuals or small business owners can make our money go a little bit further and trying to take charge of our own portfolio investing. So again, welcome to the show, Sean. How you doing today?
Jenny, doing well. Good to be here.
Thanks. Yeah. So kind of tell the, what was your ideal in creating this company of Tykr? I want to call it something else because it's spelled different. So how is it spelled? Let's talk about the spelling first.
Yeah. So Tykr, long story short, I needed a name that had like a stock market vibe to it. And like trying to find a name, like a URL, was actually very difficult, especially 4 letters or 2 syllables. We could go down a tangent on this. When you think about tech startups, you want something snappy, something short. Facebook, Netflix, PayPal, right? 2 syllables, short and sweet.
Yeah.
And I had some names early on that were not good, you could say, but landed on Tykr. It was a .pro, and then we had to go through like a bidding process to get the .com through GoDaddy. We paid a premium for that, but it was worth it.
What's funny is I've had to do that once. Right. And I think I've heard other stories of people doing it, and it's really just depends on how much you want to bid. But, people go out and buy these domains and they do crazy things. I have had to buy one, by the way, so you're not alone in that. But I'm glad you guys were able to get that. So tell us a little bit about your company. What do you guys do there?
Yeah, so Tykr is a stock screener and educational platform all in one. We're really big on education, and I'll kind of talk about that in a little bit. But like the quick backstory on the platform, we'll try to keep this short and sweet. It's an entertaining story. I hope your audience will find humor in it. But my background, not overly glamorous. I've worked in software engineering the last 15 years, mainly in project management. Had a business from like 2006 to 2010. I was an agency just building software and websites and whatnot, and went through a merger. Got out of that business, and through that duration, I learned what kind of business model I should create, something highly scalable. And I was able to work with a lot of different business models through that time period, probably a few hundred. And that helped me really understand what's scalable and what's not. Anyway, I knew what I needed to create, a SaaS. I didn't have an idea. So I went to work for large public companies the last 10 years, which was actually really beneficial from an investment standpoint. Started angel investing in 2010. Got into a few tech startups early on, hoping they'd be that next unicorn, going to the moon.
Right. Everybody's looking for that next one. Yeah,
exactly. I retire and right off to the sunset. Well, needless to say that never happened. And 2015 hit, and I'm like, I could be at this game for a long time. Angel investing it's high risk, yes, high returns, but I could be doing this 20 years and not make anything. So I'm like, let's switch things up, change the game. and focus on the public markets. And I knew guys like Warren Buffett have said, and I know you're in the investment space, you get this. They've said if they were just managing a few $1 million, they can make consistent returns between 15 and 50%. In fact, it could be closer to that 50%. The question is, how are they doing that? And we know they're not using emotions or feelings.
Right.
They're not gambling men, which means there's some foundation of logic they're starting with. Me being a software engineer or having that background in the space, at least, I'm like, they're using math. I know they are. So I went down the YouTube rabbit hole, read as many books as I could, and I actually put together an algorithm in Excel. I have to give a lot of thanks to the guy. I'll give you his name right now. It's Phil Town. He wrote 2 books. One is Rule 1. The other one is Payback Time. But yeah, I created an algorithm in Excel, and I'm like, I just want a way to remove emotions and find great businesses that can beat the market. And over 4 years, I just used this in Excel, and I had returns that ranged between 15 and 50% consistently. And I'm like, all right, now we're talking. I've got something here. Right. So then 2019 hits, and I'm like, you know what? Let's start talking to some people, start sharing this thing with friends and a few institutions, just to say, hey, would you use this tool? And everybody was like, hey, when are you going to turn this thing into a software? So it took about a year to build. Then that brings us to the summer of 2020. We went live, and yeah, we're live a little over 18 months now. We've got about a little over 3,700 customers globally. So this circles back to what we are. Yes, people can find great stocks and they can avoid bad stocks, like a lot of risky businesses.
Like a lot of meme stocks.
Right. You got it, like GameStop and AMC. It's going to steer you away from those because those will fail in our system. We find great businesses with good financials. And then what we do on top of it is we teach you how to invest. So it's great for beginners. A lot of beginners, like they love us because it's the simple stuff, like when do you buy, when do you sell, stuff like that.
So that's, and interestingly enough, that's why I fell in love with your tool, because I'm an educator by nature, right? I used to teach grad school, but I'm a stockbroker, right? I'm a licensed investment advisor, and I have a degree in computer science. So when I saw your tool, I'm like, man, I love this, right? And I started researching you a little bit more, and I love the education aspect, right? Teaching kids, I teach teens how to invest, and we do these stock market games that they have. And your tool does some unique things, and that's what I liked about it when I first saw it. And it has, and here's one of the things that I can tell you that I liked, and I don't know where this idea came from, but it's Sean's portfolio, right? This is, so tell us a little bit about the Sean's portfolio. You felt that you should say, hey, listen, I'm out there. These are kind of the holdings that I have. So, I'm putting my money where my mouth is. So tell me about this whole little Sean's portfolio. Why do you feel that you needed Sean's portfolio?
Yeah, two things we had to do to separate ourselves from the competition. There's a lot of screeners out there. And,
there is a lot of screeners. I will say.
It is, I wouldn't say saturated, but there's a lot of competition, and there's a lot of good ones out there, and there's some not so good ones, right?
Right.
Like, how do we change this? In 2 reasons. One is I'm going to show people exactly what I invest in so they can literally invest side by side with me. And if you have any questions whatsoever, like, get into these stocks. I've done very well. Of course, I'm telling people when I'm buying and selling in our newsletters once a week. So that was one reason, transparency, because there's a lot of people that own screeners, but they don't share what they invest in. And to me, that's a bunch of BS. Like, you got to be in the game. You got to be transparent.
Nowadays, see, you could have probably got away with that way back in the day, but nowadays, I mean, you got to be transparent. Hey, what do you got, man? And that's one of the things.
Exactly.
And even bringing tools on here, I'm letting people know these are some of the tools that I use. Actually, I don't bring a tool on that I don't use, right? And a lot of people say, oh, well, a lot of other channels, they'll go and buy the 14-day subscription, 7-day subscription, and they'll review it or whatever. No, I'm putting my money where my mouth is. I'm owning these tools, and I'm sharing with people what's going on. So finish your story on why you picked your own portfolio. And I'm already telling people out here, this is why you love this guy, Sean. He's like, hey, man, listen, this is what I got, man. This is what I have.
Yeah, exactly. And you can see, like, when we teach people to invest, we tell people you don't want to like own 100 stocks because you're essentially creating an index fund. You're too diversified.
Exactly.
You want to have something more focused. And like Warren Buffett, Charlie Munger have talked about like 15, 20 stocks. I recommend 10 to 15. So you can see the 10 stocks I hold and why. Like that's important too. It's like, why do I hold these businesses? So I'll touch on the second reason that really separates Tykr is our algorithm. I originally put a patent on it, and our CTO, Algar, he's an attorney by trade and software engineer.
I love these multi-talented people. Yes. But go ahead and finish. Go ahead.
Oh yeah, he's talented. I threw out the idea. I'm like, what if we remove the patent and make it open source?
Ooh.
So people could literally take the code. And it's not necessarily code, it's the calculations. It's all on our front-facing site. And they could literally go create their own version. And we did that. And I tell you what, by doing that alone, the trust in what we do went through the roof. Because people, there's a concern like, what if somebody takes and goes create a version of Tykr? I'm in software engineering. I know how hard it is to create a tool like this. The chances of somebody doing that is pretty low. There's probability they'll probably create their own thing in Excel, which is fine. Go do that, right? But
wow, so that took, I guess what we call, that took some onions for you to do. So you guys are not, so you guys are you no longer pursuing a patent, and you just open source it.
Forget about it. Today, it's stupid because like you put yourself in a position where you've got your guard up, and we actually, you may appreciate this, but we look at our competition. They're actually not our competition. We look at them as allies, because what they're doing is they're making investing easier for people in the market. Because we've had people come to us and be like, oh, don't talk to them, or they're the competition. I'm like, whoa. Let me talk to them. Let's start working with each other, because this world is huge.
Right.
And the retail investor market is growing so fast. So it's like, get rid of anything that blocks people from like working with you, any barriers. So the whole patent thing, it's like, this feels like something of the past. It's not needed.
That is so interesting. So I hear your story, but then I go and it's funny. My kids are telling, my kids are in college, and they said, Dad, we watched the, what is it called?
Social Network.
The Social Network. That's exactly what it was. Yeah. He said,
yeah.
Dad, we watched the Social Network. Man, that was crazy. I was like, you guys are just now watching that, right? I said, I own a special edition of it because I wanted to, I used to teach entrepreneurship at one of the junior colleges. And we would always go through those stories like that in Home Depot and Walmart. And, Sam Walton used to work for JCPenney's, and we would go and we'd talk about all these stories. And for you to sit here and tell me that, I guess that would be, we're in a new, because 1999, web van and all that, when I'm thinking about all that stuff, right? I couldn't even imagine someone doing what you're doing right now. I applaud that. And you're saying as a result of that, your business kind of doubled. Is that what you're saying? Or
I would say more than that. It grows faster. And this is contrarian. Is a lot of people out there, and a lot of entrepreneurs, and even people in the corporate world, they won't give away their ideas. They keep them inside. I got to hold them to my chest, and I got to play the cards at the right time.
Right.
And that philosophy is it's selfish, and you have to flip the equation and put your mindset in this giver's philosophy of like giving information away and giving things away. You don't have to give away your business, but like give value to others. And in this case, it's like, get rid of this stupid patent and like make this thing open. Because at the end of the day, do we want people to become better investors and manage their money better? That's it. That is the goal we're driving for. It's not to like defend ourselves in court and be a complete a-hole out there to other businesses. That's not our goal.
What's funny is when I started on my channel, right, I started getting comments, right? I'm the Digital Growth Hacks Club. I started getting comments of people's like, because when I first started sharing, right, I pull like the envelope back a little bit, right? Because I didn't know, being a first time on YouTube, I didn't know what I should be sharing. And you hear from all these YouTube greats, right? All these guys standing in front of their Lamborghinis and whatever. Hey, just show them a little.
You're my garage.
Yeah, I'm like, no. I said, why am I not trying to empower others to grow? And I will tell you, that actually when I started doing that, my channel started to grow a lot faster. And I'd wake up one day and say, oh, you have, 20 more followers or whatever. And it's really because I don't mind just sharing people. I'll show them my strategies. This is what I'm using to communicate. And these are the tools I'm using in LinkedIn. This is actually how I'm doing it. Right. And I think you're onto something. And if you're listening out there, I think he's onto something. You guys need to look at this. You don't have to hold everything closer to your chest. And my pastor once told me a closed fist can't receive anything back.
Yeah.
Does that
wisdom right there?
Does that make sense to you?
Wisdom,
a closed fist can't receive anything.
Yes.
And so that was the power in that. So let's so what do you, the funny thing, and I'm looking at one of the things you own Microsoft is one. We'll I want to go through a little bit more, but
sure.
I remember Microsoft. It was at, I want to say $45 or so. And they were just beaten up, man. And everybody was worried about Windows and how much longer were they going to be able to continue re-upping people and to look at their stock now at 1,400. No, the share price is now at what, 288. I think
it's close to 300.
But you have a sticker price at 1446.
Correct.
Tell me a little bit about that, right? Tell me, tell me a little bit about that.
So the concept of the sticker price or fair value, or it's also called intrinsic value, goes back 100 years to our godfather in this space, which is Ben Graham.
That's him. He's the godfather.
Yeah. He was the teacher, the professor to Warren Buffett.
Right.
And he figured out a calculation that calculates the real value of a stock. The share price we all see, that's not the value of a stock. That's
the intrinsic. That's intrinsic value, right?
The intrinsic value is the real value. The share price is what you can buy it for today, but that doesn't mean it's the value. So what we do is we calculate the real value of a stock. And as Ben Graham taught us, you want to buy something that's 50% off. It's kind of like when you go to the grocery store, you're shopping. Do you ever want to pay full price for groceries? No, right? When I walk in, if I could get 50% off everything, I'm a happy camper.
Right.
That's essentially what we're doing with stocks is we calculate that intrinsic value. So Microsoft, as you can see, massive discount. Like it's at 288 today, but that, as you just said, it's what, 1,400 sticker price?
1,446. Now, listen, and if you're listening to us discuss stocks, right, please consult your own investment advisor. We're collaborating. We're just talking about different stocks, and don't go here. Hey, they told me on the digital growth. No, we're not doing that. So by law, I need to tell you, if we discuss any stocks or any type of holdings, please consult your own professional financial advisor for additional information. But we're just having a discussion, right? We're just having
no advice.
No advice. Trust me. So what I wanted you to understand as the viewer and as a listener is using this tool, they actually have something in there called the sticker price. They're like, hey, listen, this is what the price is, but this is what the value, unlocked value, or the value of what we believe it's trading at. Or because again, when we look at share prices, it's all supply and demand, or it's all perceived perception value of what people perceive the company to be. Is that an equal way to kind of share it there, Sean?
With the share price, it's one of those things where, just to go a step further in what you're saying, it can move around based on emotions. As we saw last year, GameStop, which is essentially it's like Blockbuster video games. Like Blockbuster went out of business. You got retail stores where people get console games.
Right.
It's a thing of the past. And people are just flooding the market, sending the stock to the moon. I'm like, this is not an investment you want to be getting in.
Right.
But because of emotions, it sends it up. So that share price is always going to jump around, but that intrinsic value, that's the truth.
Right. That's not lying. That's going in, getting in, looking at the financials. Looking at cash on hand, you're looking at short term, you're looking at long term, you're looking at inventory, you're looking at a lot of things. A lot of things goes into it. So even having a Tykr or having that type of tool to assist in trying to make some of your buying decisions. I use maybe 3 or 4 different tools just to kind of bounce off of each other. There's another tool that I use. Not going to put the name out, but it has a bull's and a bear's opinion, right? There's always 2 sides, right? What are the bears saying, right? What are the people thinking about the downside? What are the upside people are saying, the bulls, right? And in my teaching, and when I'm teaching kids and teens, I always say, they say, well, what is the difference between a bear and a bull? I say, well, listen, if a bear is ever chasing you, you're probably running downhill and you're trying to get out of there. So, but if a bull is chasing you, he's probably charging up, and those are the people who believe it's going to go up. So people believe it's going to go down as the bears are chasing you in a bull. I'm teaching kids, man. I have to come up with these different stories.
Absolutely. It works.
So listen, so tell me, so do you cover every single stock or mostly the widely traded stocks, right? I'm not going to find any penny stocks or anything like that in your is that a fair assessment? Or
I'll give you a little background here. We are global, so we've got customers. I'll give you our footprint and then what we look at.
That's good. Yeah.
So we, of course, I'm here in the States. We are headquartered out of the Netherlands.
Okay.
But we've got a strong footprint, a lot of stocks from Europe. We also have a lot of stocks from like India, Indonesia, Philippines, Malaysia.
Okay.
Australia, a little bit too. And then Canada, some stocks in other countries around the world, but we've got about 30,000, close to 30,000 stocks. So we do have a pretty heavy footprint. There are about 100,000 stocks around the world. So we don't have every stock.
No, not going to have all of them. Yeah.
You've got enough to choose from. You will probably build your wealth very easily with the selection that's on there. I can say that. So,
wow. Yeah. So, so you have about 30,000 on here. And it's funny because some of the ones that I was holding, right? Obviously, when I first purchased, I said, let me see what he's up to, right? Let me see what we got here. So I start plugging in the ones that I own, and I'm a long-term value investor, right? When I first got into trading stocks, I used to work for a very conservative company, Edward Jones. I used to work for, they were very conservative, right? They were very buy whole, very dividend heavy. And so they didn't like a lot of churning of people accounts, right? Trying to create all these different commissions and all that. And so when I got into this business over 20 years ago, that's kind of what I've learned. And I've kind of stayed tried and true to that. But I think leading to my next question, as we kind of move midway through here, I do have a lot of clients that come to me and they're beating down my door. They're calling me. I'm trying to avoid their calls because they want to add crypto and they want to add a lot of crypto to their portfolio. I'm like, wait, let's slow down. Why do you want to own crypto? They're like, oh, because everybody's owning it. That's where it's going. I'm like, well, we're still a little bit of ways. Reason. Yeah, they just want to own it because everybody else owns it. I'm like, well, we're still a ways away from crypto being what it is. And I don't want to make this conversation about crypto, but let's kind of get into it a little bit. You're just doing stocks or let me see, tangible assets companies you can own, right?
So we're all stocks. We will be adding ETFs. We will rate ETFs. ETFs essentially is, a bundle of stocks together. What we'll do is rate all the businesses within the ETF and give an overall score to
Love that. When is that coming, by the way?
That's hopefully in the next 6 months.
Okay.
Yep. And
I'm
then
looking forward to
also, good. I know a lot of people have been looking forward to that. So we'll do that. Penny stocks are in the tool, but penny stocks usually fail because penny stocks are usually garbage businesses with bad financials. So if you see something that's overpriced or red, you can probably avoid it. And real quick here for the audience, a penny stock in US dollars is any stock that's $5 or less. If you think you're getting in early to something new and hot that's going to go through the moon, the problem is institutions won't touch it when it's at that level. So it will never move higher than typically $10.
Right. I haven't dealt in those in a while, but I remember when I got my securities exam, is that the pink slips or they're not over
pink slips? Yeah.
Okay.
You ever seen
Man,
you ever seen Wolf of Wall Street?
Right.
Yes.
That's what, it's funny because I had to take that for my exam. And I couldn't remember that, but I never got into it. So I never really, but I've always heard stories of people being in a room or a trading room or a Facebook group or whatever, and people are talking about it. And to me, I'm like, man, people are trying to pump and dump on you, right? They're trying to pump up a penny stock. Hey, it's going to go to 25 cents next week, and everybody hops in it, and then they own it and they got out of it. And so anyway, that's another story, but let's get back to the crypto.
Yeah. We'll touch on crypto here in just a few seconds here. So penny stocks, it's like, highly, 99.9% chance you're going to lose money getting into these low quality pink slip penny stocks. So avoid those. Crypto, we will be adding crypto to Tykr in the near future. Now I'll give you a little context here, and this already because you're in this space, but a crypto is a different asset because it's not a business. It doesn't have an income statement, a cash flow statement, or balance sheet. So we can't analyze any of the data. Right. Nobody can. So you don't know where crypto is going. Now, the reason we're adding it is we're adding a feature called a portfolio tracker. So you can add to your portfolio, you can track your returns and different bars and graphs and all this. This really nice interface that lays it out for you. People want to be able to track that asset class, crypto, right there with their stocks. Now, I will say this with crypto, it's similar to stocks. Like, you want to see a higher price because that means there's more volume and there's more institutions in it. This is why penny stocks don't get any traction. Most stocks we're all aware of, like the Teslas and the Microsofts, and they have a significant amount of large institutions buying this. So the prices are higher. With crypto, there's people that look like, a Shiba coin, and then there's Dogecoin, and all these garbage cryptos that aren't going to get that volume. They're not going to take off because they don't have the institutions buying it. But if you look at, and this is again not financial advice, if you're going into crypto, you want to look at what are the higher price coins, because they've got more backing from institutions, more interest. So the Bitcoins, the Ethereums of the world. So that's, if you're going to play the game, do that.
Play on the institutional side, because they got a lot. You may put a couple of thousand in it. Trust me, if they're moving a volume and it's moving up like that, they're heavily invested. So you want to don't want to be where the big boys are if you're saying to play in that space. Okay.
That's it. You get in, and you gotta set expectations, because you're in for a roller coaster ride. That's the thing. Hold on. Right. It can go down 1,000%. Right. It can go up 1,000%. I don't suggest putting any more, and we will be teaching this at Tykr, any more than 5% of your net worth into crypto. But if you want to play with like Bitcoin or something, fine, right? Yeah. That's it.
So I do a little dollar cost averaging into it, right? $25. I'm not trying to change the world. I just want to be in it because people say, "Are you in it?" It's like, well, yeah, I'm in it. My challenge with it, right? And it's the same challenge that Warren Buffett has, is it's not correlated to anything. Right. You can't. So when people say cryptocurrency, is it really a currency? No, because it's not tracked by inflation. It's not tracked by interest rates. So there is no track. Right. And so it can be influenced by CEOs of companies. Right.
Yes. It's emotions.
It's emotions. Right. And really what we're trying to get to, and what your algorithm is trying to get to, is let's remove the emotions out of it, right? Let's stick to the fundamentals, right? What does the financial say, and so on and so forth. That is my biggest challenge with crypto. I do not, and now I'm not crypto bashing, right? I don't want people coming to my channel and doing all this other stuff. Oh my God, I can't believe. I'm letting you know that it is a non-traditional asset. Non-traditional. It cannot be tracked, right? It's not a painting, right? It's not a collector's cars. It's not any type of asset like that. These are just coins that may have value in the future. What do we know what that value will be? I don't know. There will be a huge tax ramifications. So just so people know, there's a lot of things tied with that. It almost becomes, it's a lot of things to do. It's a lot of things to keep up with. It's almost like, I'm not even going to say that, because I was going to say
it's one of those things where you gotta weigh the pros and cons, and a lot of people aren't looking at that. They're like, okay, can this make me rich? That's what they care about.
Yeah.
And you're right. There's taxes there. There's the lack of tangibles, and let's touch on businesses for a second. So a lot of people, they approach the stock market and they look at stocks as stocks. But as Warren Buffett teaches us, and I got to give credit to Phil Town on this too, is stocks are businesses. Businesses are in place to solve problems. They're selling products and services. In most cases, they're not going to sell products and services today and then say tomorrow, you know what? I don't want to do this anymore. I'm just going to close up shop. It doesn't work that way.
It does not work that way.
That's why stocks, typically, they always go up. There's statistics to this. Stocks always go up more than they go down. So if you can think long-term and get in and have the discipline to hold, you're most likely going to make money over the long term. Most likely. With crypto, this goes back to, you don't know where things are going. So if you do enter this space, just play the game with the big boys, enter the big cryptos. That's where, and I've heard some great stories of people making a fortune, but they sold at the right time. So
yeah. They got a heavy tax bill as well.
Oh yeah.
Because
what is the tax now on crypto in the States?
I'm not certain. I know that it is taxed, and I think people felt comfortable because I think some larger institutions was accepting crypto as a form of payment. And if I'm not mistaken, I think with the new metaverse and all that, I think there may be a resurrection of Facebook's crypto, because I think their currency. I think they abandoned it for a little while, but I think it's with the NFTs coming back, and with with the metaverse going in its direction, they need a second act now, because with the revenue going down, as far as they need a second act. They're down. They're going to lose $10 billion in ad revenue just as a result of the changes with Apple, right? And that was just with the changes with the Apple iPhone. But now Google has already came on and says, hey, listen, we're going to be doing the same thing to Androids. So if they took a $10 billion haircut from ad revenue, Facebook or Meta, now with Android coming along, and they're saying Android owns 90% of the market, of the handheld market, they're going to take a massive hit. So now they're shifting. They're gearing up for their second act as well. So that's going to be interesting, to say the least. So again, as we kind of wrap up here, there more than likely will be a link to some type of deal that you guys may have. I'm going to put that, whatever deal you guys have, I'm just going to post it in the description. Whatever you guys find there, whatever they have off or whatever they're running, I'm going to post it here in my link. I love this company, Tykr. You guys should take a look at them if you're trying to look at a company that'll help you kind of put a portfolio together. That's going to give you the education as well. That's going to put their money where their mouth is. They're going to share their Sean's sharing his portfolio wide open there. Hey, that's what he's doing. Let me quiz him on a couple more of his holdings before we wrap up here.
Sure, please.
He has some pretty obvious ones, so I'm not going to ask about the Apple and the Google and the Microsoft. Those are necessary. You must have, your Alphabet, different things like that. AMD, obviously. I mean, AMD. I mean, come on. Yeah. So you have AMD. Okay, so you have a sticker price on AMD at 203. Right now, share price is at 116. Do you know off of the top of your head the reason? And you guys have a score too. So that was one of the other things that they have. This is the reason why I love this company is they have a score, right? They have a sticker price, things that you can look at, things that you can understand. So your score, this has a score of 16. So to you and putting your algorithm together, and I'm not going to, hold your feet to the fire or anything like that. But in your imagine, you guys came up with the score. This has a score of 16. AMD has a score of 16. And then, Google has a score of 19. And then Apple has a score of 16. So your highest number then is what in your score range?
It's 20. Yeah.
Okay.
And
yeah, go ahead.
And we're going to be moving to a 100-point scale, because it's like if you get a 90 or an 80, It's easier for you to understand. Oh, it feels like 100 points there. But
Anyway,
we'll just use the 20 points for here. So this is a key point to the world of software engineering, why I come from.
Mm-hmm.
With value investing, which Tykr is very much based out of, there's a lot of investors that say value investing is dead. Well, what they're saying is they're only looking at that sticker price. And I will say this, that when I was looking into stock investing, there's a lot of, I see this issue within finance, actually. There's lack of rigor. There's a lot of analysts over analyzing, but they're looking at the wrong things. And what I found is Phil Town in his books, and then about 70% of the math from him went into Tykr. He had significantly more rigor than anybody else out there, because he's looking at, I'll break it down for you in layman's terms.
And rigor, when he says rigor, it means it went through a very tough set of rules. Yeah. Okay. I just wanted to make
hurdles.
Yeah.
Hurdles in order to qualify. Mm-hmm. So here it is. So you look at the sticker price, that's one thing, but you don't stop there. What you want to do is look at the last 5 to 10 years and see how the revenue, that's your sales, is that increasing year over year? And you want to look at your net income, same thing. You want to look at your earnings per share, same thing, your free cash flow, your assets liability, your equity. And I was blown away. And as soon as I was reading it, I'm like, there we go. That's the thing that makes sense. And when I put it all in this Excel sheet, I noticed I was looking for different variables, and I'm like, how do I visualize this? And if they hit a certain point, like a certain percentage, they would get a point. And soon enough, I realized I'm creating a point system here. We need to make this point system like really fun and visual within the tool. So that's why the 20 points. So anyway, you look at AMD, the point, I mean,
that's advanced micro devices, and not making any recommendations. We're just having a discussion.
Yeah.
So seek out your own advice from your own financial professional. All right. I'll put that out there. So AMD. Yeah. So let's talk.
Yeah. So the higher the score, what we teach people is the higher the score, the safer the investment. That means all the boxes are checked. It's got great financials. And if anything is less than 10, it's not going to be on sale. So if you get above 10, that's pretty good. 10 out of 20, that's pretty good. So that's a 14. Google, yes, 19. Incredible financials there. So another strong, again, not financial advice, but
they're printing money between them and Apple. They got a print machine in the back.
No kidding, right?
Seek out your own advice, right? Yeah. Two financial guys here. We're accredited investors. We kind of know what's going on. But so AMD and NVIDIA, those are the two largest in the space, in the semiconductor space.
Those are the two big players.
King Kong and Godzilla, right?
Everybody
else is trying.
Well praised.
I teach kids, man. Come on, this is what I do, right? So no, this has been fun. This is if you guys get an opportunity to take a look at Tykr, the tool, again, I may have a link or something below. Is there anything else that you would like to share? I'm looking forward to your EFTs, your EFT portfolio analysis or bucket breakout. I'm looking forward to that. And then I'm also looking forward to having the ability to store a portfolio. Is that what you said?
Absolutely. Yeah.
Portfolio tracker. Yeah. So good. I'm looking forward to that, man. I invested in the right company myself, and
we're trying.
Invested in Sean here myself. So give us some words of wisdom. It could be financial, it could be ETFs, it could be the future. You can see where things are going. Tell us what it is, and don't tell us Procter and Gamble, because they're the leading staples.
No,
give us, that's easy stuff, right? Don't tell us Lowe's or Home Depot. Don't give us the easy stuff, man. Give us some words of wisdom. It can be on stocks. It can be for the entrepreneur out there, for the small business person, because a lot of people out there, they have to put their own retirements together. They have to put their own portfolios together as well, because they're like, hey, listen, I don't work for anyone anymore. I just run my own business. I do digital I sell digital products, but I need to be able to save and store and put my own portfolio together. So that whole blended world, tell us what give us some words of wisdom as we kind of close this up. And this was a good talk too, by the way. This is good.
Yeah. Thank you. I've enjoyed this myself. Now, to speak to entrepreneurs a lot out there, I'll give some good advice. There's a lot of entrepreneurs I've talked to, they put all their eggs in one basket, their own business. And I've known people, they'll work through their 20s, their 30s, their 40s. And there's a lot of businesses out there, believe it or not. I know this is a tough pill to swallow, but especially service business, it's very difficult to sell because the enterprise value, there's no major multiple against it. People don't want to buy a job. I can't emphasize that enough. I've known a lot of people, they're in their 70s now. They're working in an agency or some kind of service business, and they can't offload it because nobody wants to buy it, because nobody wants to buy a job. And on the flip side of the equation.
So when you say that, so I want you to finish that thought. When you say no one wants to buy a job,
correct.
Explain that down, break that down a little bit more.
So when you have to trade your time for money in a business, that is a job at the end of the day, right? Whether you're working for the company you're owning or you work for some other business, it's a job, and nobody wants to spend money to do that thing.
Right.
People want to buy an asset that's producing money residually. And right. This is a whole nother topic of a conversation.
Yeah.
So what I tell entrepreneurs is don't put all your eggs in one basket. Build your agency. Make sure you're taking the money left over and you're investing in the stock market. And what you want to do there is latch on to these businesses that have the reoccurring revenue, the multiple revenue streams, like the Googles and the Microsoft of the world, right? These
the Verizons,
because that compound interest, that's what's going to build your wealth and allow you to retire. Because I'm not kidding you, Jenny. I've talked to multiple entrepreneurs, 60s and 70s, that cannot retire because they never invested. They kept investing in their business and had this tunnel vision that, oh, I know what I'm doing. I'm going to reinvest in my business. And the thing is, it's getting harder every year to sell businesses. You got to have a significant residual stream of revenue in your business to see any value. I'm sorry, but that is the absolute truth.
Wow. So that's some words of wisdom. That is an eye opener, not for myself, of course. And the only reason why I said it, and a lot of people ask me, right, outside of having the multiple degrees and stuff like that, and why do you choose to run 3 different corporations? I said, because I've been burned before, right? I never diversified my business. So now I diversify my business. I have a software app, right? I have other businesses that I'm able to diversify. If you look at and this is what I used to teach when I was teaching grad school, and I wanted my students, when I taught finance, I wanted my students to master the statement of cash flows, where really the statement of cash flows will tell you what you need to be doing as far as diversifying. You need to be financing, right? You need to be investing back in your business. You need to be investing in other businesses. And I tell people, and I used to use this story, I used to say, hey, do you think Pepsi had a bad year? I was like, yeah, they probably had a bad year. Well, who do you think beat them? Well, Coke. Yeah, they probably own Coke stock, right? So if they had a bad year, they made up for it because
they're still making money.
Or they're still making money. And that's how I give the diversification. If FedEx had a bad year, who did they lose to? They lost to UPS. No, but they own a lot of UPS stock in their portfolio. So that was the thought process. And I kept telling people to start having when they're in their businesses. And I think a lot of people, I was teaching this at this chamber last week, and I was telling them, just think about it. I said, do you know who used to own Redbox? They're like, Redbox? I mean, they're talking about the little video place. It used to be like, yeah, I said, McDonald's used to own them. They're like, wait, what? Yeah, McDonald's used to own Redbox, right? It was on their statement of cash flows. McDonald's used to own Chipotle, right? And it's the cash flow, whatever's going to move the needle sometimes in your business. And if it's not your core business, it's not your core business, but it is an opportunity to move the needle in your business and then position as an exit strategy and then add more cash back to your books so that you can invest elsewhere. And you have to be thinking like that. So this was good conversation. You want to close it out? I'm gonna give you the last word because you kind of got me inspired, man. It kind of got me fired up when you start talking about the diversification and no one wants to buy a job, right? It's like, I don't want to buy a job and pick up phones and do all that stuff again. I want to buy a tangible asset that produces monthly recurring
income.
revenue. Yeah. Residual income that compounds. And then if
That's
you own
it.
companies that pay dividends, and some companies swear by dividends, some companies will lay off staff or lay off employees to make a dividend payment. Right. That's a whole nother
Right.
That's a whole nother conversation. Man,
Yeah,
we could be here all day. So any last words you want to, I'm gonna let you get the last word. I'm sorry. I got hyped up on the diversification thing.
I got you riled up there a little bit. No,
yeah, you got me worked up, man.
I keep it really simple here at the close. I'd say, give Tykr a try. It's free to join. It's tykr.com, tykr.com.
Mm-hmm.
And if you have any questions, you can email me. On the site, there's contact links, and I get those emails. So I'll respond to you personally. And I'm on LinkedIn a lot, actually. So if you want to connect with me there, that's a great place.
You guys heard it here. He's open up invitation. I'll probably have a link. I think we got some kind of special going on. You can pick that up below in the link below. So again, this has been fun. This has been exciting. That's what I love about my show. I get to meet exciting people, good people like yourself, Sean, that's thinking outside the box. That's trying to change the game. I really do appreciate it. Hopefully this was beneficial to you who are out there listening or viewing. I'm going to be bringing a lot of different conversations to help you grow your bottom line and change your bottom line and try to make sure we have you around for the next 4 or 5 years in your business. There's diversification, people. If you learn nothing else here today, diversification, dividends, long-term investing. Man, that's a meatball sandwich right there. All right. Hey, it's been fun. Right. I had an awesome time. Thank you for joining me here today on the Digital Growth Hacks Club, where we're trying to help you grow your bottom line and be a difference maker in your industry. Until next time, you guys take care. Goodbye for now.
Thank you for joining us here on the Digital Growth Hack Club, where we help you elevate your business and your bottom line. Please do not forget to subscribe and share. And until next time, goodbye for now.